Hello students! Welcome to the financial section of your Young Entrepreneur program. My name is Sarah and I will be guiding you through the financial portion. I will start with an introduction of myself and my business. I will then talk about financial statements. We will discuss record keeping, sales taxes, and some helpful websites. So my name is Sarah Sabo and I'm a certified management accountant and also a chartered professional accountant. I have had my own public practice business for over 5 years. The main services that our business performs are bookkeeping, corporate year-ends, personal tax returns, GST and PST filings, and payroll. My business name is Aries Accounting, and there's a link to our website. Financial statements. There are 3 main financial statements: the income statement, the balance sheet, and the cash flow statement. We will cover the first 2 statements in this presentation. However, we're not going to discuss the cash flow. I will mention that you should always be aware of your cash flow situation by monitoring how much money is coming into your business and how much money is going out. There are 3 main areas of an income statement. These are revenue, expenses, and the net income or net loss. Sales is the revenue that's earned from selling your products and your services. Expenses are any amounts spent in order to earn sales. Some expenses include materials, wages, office, travel, and computer repairs. There's also income taxes, which we will discuss later. Net income is the income that's left over after all of the expenses have been paid. Here's a basic layout of an income statement. It'll start with your company name, the title, income statement, and for the period that the income statement covers. In this case, the income statement is covering for the period ending December 31st, so it's from January 1st to December 31st. In this example, sales are $10,000. We're going to pretend that it's a video game store. So the owner of this video game store sold $10,000 worth of product. The expenses that he has are purchases. So these would be when he bought his video games from his supplier. He also has advertising, which in this example we're going to say is a website and some radio ads. And then he has wages of $1,500, which he had to pay to some employees to watch the store for him. That gives us total expenses of $4,500, leaving us with a net income of $5,500. The next statement is a balance sheet, which is comprised of 3 main areas: assets, liabilities, and equity. Assets are items that your business owns, such as cash, accounts receivable, and inventory. Also, we have capital assets, which are property, equipment, and computers. Liabilities are amounts that your business owes to other people or other companies. So bank loans, accounts payable, and taxes payable. Equity is a section we'll just touch briefly on as it can be confusing, but in this example, it's going to be the owner's contribution and or shareholder's loan. Here's an example of what a balance sheet will look like. It starts again with the company name, the title, which is balance sheet, and it's an as at date of December 31st. Versus the income statement that covers a period of months, a balance sheet is at a specific date in time. So in this example, the business owner at the video store has $10,000 in his bank account at December 31st. He also has inventory of $3,000. Inventory is products that he has purchased from his supplier but has not yet sold. So he has $3,000 worth of video games on his shelves at December 31st. Capital assets of $4,000 would be items such as his computer equipment, his cash register, and his sales software that he uses. These capital assets are generally items that are going to last longer than 2 years, and they're of a higher dollar amount. Liabilities on the other side of the sheet are accounts payable, which are items that you have purchased but not yet paid for. So for example, he may have had his website developed and he has received the invoice from the website developer, but he has not yet paid for that website. That would be an accounts payable. Line of credit. In this case, he has borrowed $10,000 from his bank in order to get his business going. He owes this money back to the bank, so it's a liability. Equity is owner's contribution of $2,000. What this means is that the owner borrowed $2,000 from his own bank account and put it into the business to be able to pay for materials or items he needs. And as the name indicates, the balance sheet must always balance. You'll notice total assets equals total liabilities and equity. When starting your own business, it's a good idea to open a business bank account. We suggest having 2 accounts, a checking account and a savings account. The checkings account can be used for your primary day-to-day activities, whereas the savings account you will use to save for your tax payments such as GST, PST, personal taxes, and perhaps corporate taxes. Record keeping is very important when you have your own business. It is vital that you keep all of your receipts. You should also keep copies of your sales invoices, keep your deposit book handy, and always keep the paperwork you get from the government. Here's an example of a spreadsheet that we use for some of our clients when we're tracking their expenses. You can also use a spreadsheet like this for budgeting purposes. You will see that the spreadsheet is broken down by the receipts on the left-hand side under details. There's a date column, a GST column, and then all sorts of columns for the expense categories. You'll note in the first example, it's a Home Depot receipt for some screws and wood. We're going to say that this was used for a video store owner because he had to build some shelving in his store. You'll note that we take the total amount of the receipt and we separate out the GST. The GST can be claimed later because he's a GST registrant. The remaining amount of the receipt is your expense portion. Further down this slide, you'll see other examples such as staples and meetings with clients. Those are all in their own categories with the GST broken out. We also have a tab for revenue, so you can track your sales by customer, invoice number, dollar amount, and your GST. This all flows nicely into the income statement. You can see the revenue from the earlier tab and the expenses from the previous tab, leaving us with a net income. Sales taxes. In our country, we have various sales taxes. In our province, British Columbia, we have GST, which is a goods and service tax. GST is 5% charged on top of services and products. For example, my accounting fees are a fee plus 5% GST. The GST is handled by our federal government, the Canada Revenue Agency. PST is a provincial sales tax run by our provincial government, and it is 7% charged on products, not on services. There's some examples of services that are PST exempt, such as accountants, haircuts, and meals. HST is an old sales tax that we used to have in British Columbia, and it still is in place in other provinces. If you're going to start your own business, it's a great idea to meet with your accountant to discuss these sales taxes as they are confusing. Here's some helpful websites that you can use when you want to start your own business or when you're doing research for your program. The Canada Revenue Agency has a wealth of information on their website related to GST, payroll, and all other topics. The provincial sales tax has their own website where you can learn about what items are PST exempt and other information. And the One Stop Business Registry is a great website to go to when you're starting your business, as it will give you step-by-step information. Thank you and good luck.